Ladies and gentlemen, every trader dreams of making a fortune. But let me tell you something straight. It's not the market that ruins traders, it's the trader himself. I've seen fortunes built in a week and lost in a day. I've lived both sides of that coin, and it's colder on the losing end. As Jesse Livermore once said, the game of speculation is the most uniformly fascinating game in the world. But it is not a game for the stupid, the mentally lazy, the man of inferior emotional balance, or the get-rich-quick adventurer. Now, let's talk about the two deadly trading moments that kill accounts instantly. There is one temptation that has destroyed more trading accounts than any bad market, any flash crash, or any algorithm ever could: the urge to average down on a losing trade. It's a quiet whisper that starts in the back of your mind the moment a trade moves against you. You see the price dip, you tell yourself it's just a pullback, and before you know it, you're clicking the buy button again, doubling your exposure to a position that is already wrong. You call it buying the dip, but in truth you're feeding your ego, not your account. Jesse Livermore, one of the most legendary traders in history, carved this rule into stone: never average losses. He didn't say it as a clever slogan. He said it as a survival commandment. He learned it through blood, fear, and ruin. Averaging down feels logical when you say it out loud. If you liked a stock at 100, surely it's a bargain at 90, right? But trading isn't a game of bargains, it's a game of timing and control. When the market moves against you, it's sending information. The price action is saying, you were wrong. The moment you add to that position, you aren't listening to the market anymore. You're arguing with it. And the market always wins. Averaging down is born from pride. Every trader wants to be right. The human mind resists the pain of admitting failure, so instead of taking a small loss, you convince yourself you're being smart by improving your average price. But the reality is brutal: you are converting a small, manageable wound into a bleeding gash. Livermore often said that the difference between professionals and amateurs isn't in how much they win, it's in how fast they take a loss. Professionals cut it instantly. Amateurs negotiate with it. They pray, they hope. And hope, Livermore warned, is the most expensive emotion in trading. When you add to a loser, you are no longer trading from a plan, you are trading from emotion. Each dollar you commit tightens the noose of bias. Your perspective narrows, your objectivity fades, and suddenly, every tick against you feels personal. You start justifying why you're still in the trade instead of assessing whether you should be. You search for news to confirm your position. You read opinions that make you feel better. You stop being a trader and start being a believer. And belief is a dangerous thing in markets that live on change. Livermore's brilliance was that he understood markets are never wrong, opinions are. The tape, the flow of prices, tells the truth. When the tape contradicts your opinion, your job is not to fight it but to adapt. Cutting a losing trade doesn't mean you failed. It means you've preserved your capital and, more importantly, your clarity. Every dollar you save on a bad trade is a bullet you can fire at a better one later. Capital is not just money, it's opportunity. Lose it, and the market doesn't care how smart you are. You're simply out of the game. Averaging down often masquerades as patience. Traders tell themselves they're long-term investors, now waiting for value to emerge. But that's just denial in a suit. The line between trading and investing isn't in the time horizon. It's in intent. A trader has an exit plan before entering. An investor accepts short-term pain because of long-term conviction backed by fundamentals. Most traders who average down have neither. They're just trapped between fear and hope, waiting for the market to forgive them. It rarely does. The great irony is that most traders who average down aren't trying to make more money. They're trying to avoid admitting they lost some. The pain of loss is psychological, not financial. It's ego. And ego has no place in trading. The best traders survive because they treat each loss as tuition, a small fee for staying in the school of markets. Livermore took thousands of losses in his career, but he treated them as data, not defeat. He'd say, "A loss never bothers me after I take it. I forget it overnight." But being wrong and not taking the loss, that is what does damage to the pocketbook and to the soul. When you double down on a loser, you don't just risk your account, you corrode your discipline. You teach your mind that rules are flexible, and that emotion can overrule logic. That's the start of the end. Trading is not about perfection, it's about survival. And survival means protecting your capital above all else. Take the loss. Close gate, clear your mind. The market will open again tomorrow, and if you still believe in the setup, you can always re-enter with a fresh perspective and a lighter heart. The truth is simple but hard. Every great trader is also a great loser, because they know how to lose well. They cut fast, they move on, and they never, ever add to a losing position. Livermore's rule wasn't a suggestion, it was a law written in experience. So the next time the market goes against you and that little voice whispers, Just buy a little more to bring your average down, silence it. Remember the man who made and lost fortunes but left behind wisdom that never expires, never average losses. Take them quickly, learn the lesson, and live to trade another day. There's a moment in every trader's life when the market seems to be running away without them. Prices surge, charts light up green, social media explodes with screenshots of profits. You sit there, heart pounding, watching candles climb higher and higher, and you tell yourself, I can't miss this. So, you click buy, not because your setup appeared, not because your analysis confirmed it, but because your emotions screamed louder than your logic. And just like that, you've fallen into one of the deadliest traps in trading, chasing the market out of greed. Jesse Livermore knew this temptation better than anyone. He said, the desire for constant action irrespective of underlying conditions is responsible for many losses in Wall Street, even among professionals. That single sentence holds the entire anatomy of greed. It's not just about wanting more money, it's about wanting now. The modern trader doesn't lose because he lacks information, he loses because he can't sit still. He confuses movement with opportunity. He mistakes excitement for insight. Greed disguises itself beautifully. It doesn't show up wearing a villain's face. It arrives as ambition, as urgency, as momentum that whispers, everyone else is making money, why not you? It makes you believe that missing out is worse than losing, but in truth, chasing trades is the fastest way to hand your money to someone more patient than you. Livermore often said that the big money is not made in the buying or the selling, but in the waiting. Yet waiting feels unbearable when greed takes the wheel. When you chase, you lose your position of power. The market dictates the price, you react. You're no longer a strategist, you're a follower. You're trading from emotion, not execution. You convince yourself that momentum is your edge, but what you're really doing is buying into someone else's profit-taking. The traders who entered early, the ones who followed their plan, are now selling to you. You've become their exit liquidity. There's a cruel irony in chasing. It feels good at first. You get that rush of action, that dopamine hit that says, I'm part of the move. Sometimes, you even make money, but that's what makes it dangerous. A profitable chase is like a bad teacher. It rewards bad behavior. It trains your brain to equate recklessness with success. And eventually, that habit brings ruin, because the market doesn't stay merciful for long. The same greed that pushes you in will keep you from getting out until it's too late. Livermore believed that markets are mirrors of human nature. Every tick up or down reflects the psychology of millions of people. Fear, greed, impatience, hope. Chasing is simply greed made visible. When you buy because you're afraid of missing out, you're admitting that your confidence in your system is weaker than your faith in other people's excitement. You're saying, I don't trust my process. And once you stop trusting your process, you're no longer a trader, you're a gambler with a quote screen. Discipline is what separates the professional from the emotional. The disciplined trader waits for confirmation. He doesn't care what the crowd is doing. He doesn't buy because something is moving. He buys because it meets his criteria. He's not afraid to miss a move because he knows the market is endless. There will always be another opportunity, but there will never be another him if he blows his account chasing one. The great paradox of trading is that the fastest way to lose money is to try to make it quickly. Greed compresses your time horizon. It forces you into trades with poor risk-reward. It blinds you to warning signs. You enter without planning your exit, and when the market turns to freeze, you tell yourself it's just a minor pullback. You hold longer than you should, and by the time you realize what's happening, the profits you dreamed of have turned into losses you can't afford. Greed seduces you in with pleasure and leaves you with pain. Livermore often described his greatest profits as coming from trades he did not take, the ones he waited for. He said patience was the hardest virtue in speculation, but also the most rewarding. The lesson is timeless money is made by sitting, not by chasing. The market rewards those who respect timing, who wait for their pitch. A trader who chases is like a hunter firing blindly into the woods. He wastes bullets and scares away his real target. The discipline to not trade is what keeps accounts alive. Every time you resist the urge to chase, you strengthen your control. Every time you stick to your setup and ignore the noise, you prove to yourself that you're trading the market, not your emotions. Livermore knew this. He'd sit for days or weeks without taking a trade, studying the tape, waiting for alignment between price and conviction. When the moment came, he struck decisively, but only then. So, the next time the market takes off without you, remember missing a move doesn't cost you anything. Chasing it can cost you everything. Livermore's wisdom still echoes across time. The desire for constant action is fatal. True mastery lies in restraint. The trader who learns to wait will always outperform the one who chases. Because in trading, just like in life, patience is profit, and greed is ruin. In the world of trading, people are always hunting for the next secret, a magic indicator, a bulletproof strategy, a hidden formula that can predict the market's every move. But if you look at the traders who last, the ones who make it through storms that wipe out thousands of others, you'll notice they all share one thing: discipline. Not intelligence. Not luck. Not access to inside information. Just the quiet, relentless discipline to follow their plan when every emotion inside them screams to abandon it. Jesse Livermore said it best. It was never my thinking that made the big money for me. It was always my sitting. What he meant wasn't about laziness. It was about control. The ability to sit tight, to wait patiently when the setup isn't ready, and to hold firm when it is what separates the professional from the emotional. Trading in its purest form isn't a contest of knowledge. It's a contest of self-mastery. Discipline is the trader's real edge because the market is designed to test your emotions. Every tick, every sudden spike, every drop. It's a psychological trap waiting to be sprung. The charts don't just reflect price movements, they reflect your impulses. Fear and greed are constantly pulling you in opposite directions, and without discipline, you become a puppet in their hands. You buy too soon. You sell too early. You break your rules because you feel something, and that feeling usually costs money. Most traders lose not because they lack skill, but because they lack consistency. They have a plan, but they don't have the patience to follow it through. They trade from boredom, from anxiety, from excitement, from anything but logic. The disciplined trader, on the other hand, lives by rules that are carved in stone. He knows his entry, his stop, and his exit before he clicks the button. He doesn't move his stop loss because the market looks little different today. He doesn't double his position because he's feeling lucky. He doesn't revenge trade after a loss. His discipline is his armor. Livermore once said, "The game taught me the game," and it didn't spare the rod while teaching. What he meant is that every mistake you make in trading, every broken rule, every lapse in discipline, is punished instantly and often brutally. The market doesn't care about your excuses. It doesn't reward your effort, it rewards your execution. Discipline is the only tool that keeps you from making the same mistake twice. Without it, you're doomed to repeat them until your account balance teaches the lesson for you. Here's the harsh truth: discipline is boring. It's not glamorous. It doesn't give you the adrenaline rush that chasing trades or predicting tops does. It's repetitive, mechanical, methodical, and that's exactly why it works. The traders who rely on excitement are gone within a few months. The ones who rely on discipline are still standing years later, quietly compounding their gains while the gamblers blow up one by one. Livermore understood that real trading was a business, not a thrill. You wouldn't run a company by making emotional decisions every 5 minutes, yet traders do exactly that every day. They forget that consistency beats brilliance. The market doesn't care if you're a genius. It only cares if you can stick to your edge long enough for probability to work in your favor. Discipline turns randomness into structure. It transforms chaos into opportunity. It keeps you steady when others are panicking. Every trader eventually reaches a point where their greatest battle isn't with the market. It's with themselves. You'll find that discipline isn't just about following your plan. It's about protecting your mindset. It's saying no to overtrading when you feel restless. It's accepting small losses without emotional breakdowns. It's sticking to your risk limit even after a winning streak tempts you to go big. Discipline isn't a one-time act, it's a lifestyle. It's who you become when the market tests your patience for the 100th time. Livermore often reflected that markets are cyclical, but human nature is constant. That's why discipline will always be the greatest edge, because while algorithms evolve and strategies change, the one variable that remains volatile is the trader's own behavior. If you can control that, you've already beaten 90% of participants. Most traders lose money because they think discipline is a trait they either have or don't have. But it's not. It's a skill, one built trade by trade, decision by decision, day by day. In the end, discipline isn't about being perfect. It's about being prepared. It's about trusting your system when the world seems uncertain. It's about doing the hard, unglamorous work that no one sees. Journaling trades, reviewing mistakes, refining your edge. Every moment you stay disciplined, you strengthen the habits that build consistency, and consistency is what prints profits over time. Livermore's life was full of both triumphs and failures, but through it all he never wavered from this truth: the market rewards patience, not prediction. The trader who learns to control himself will control his destiny. And that's why, when all the noise fades, the greatest edge in trading isn't found in indicators or news feeds. It's found in the quiet mind of a disciplined trader. Hope and panic, two sides of the same coin, both deadly in the hands of a trader. They are emotions every human carries, but in the market they are fatal flaws. Hope whispers to you when your trade is dying, and panic scream when your trade is thriving. Together, they've ruined more accounts than bad analysis ever has. Jesse Livermore understood this better than anyone when he said, "A loss never bothers me after I take it. I forget it overnight. But being wrong and not taking the loss, that is what does damage to the pocketbook and to the soul. Hope is seductive. It feels like faith. It feels like courage. But in trading, it's just denial wearing a noble disguise. When a trade starts to move against you, logic tells you to cut your loss. The market has spoken. You were wrong and that's fine, but then hope creeps in. You tell yourself, it's just a small pullback. It'll bounce. You look for reasons to justify holding on. A news article, a tweet, a hunch. You stop analyzing and start rationalizing. Every minute you hold that losing position, you're not trading anymore, you're praying. The problem is, the market doesn't hear prayers. It doesn't care about your hopes, your plans, or your need to be right. It only reacts to money, inflows and outflows, supply and demand. When you refuse to accept a loss, you're fighting the purest form of truth there is, price. And price always wins. Livermore said it simply, the market is never wrong. Opinions often are. Hope destroys discipline. It traps you in losing positions because you can't bear the pain of admitting defeat. But the real pain comes later when the small loss becomes a big one. Hope delays reality, and in the market, delay equals damage. The traders who survive are not the ones who never lose. They are the ones who lose quickly. They face reality without emotion. They don't hope for the market to turn. They act when the facts tell them to. Hope is not a strategy. It's a slow form of suicide for your account. Then there's panic, the twin brother of hope. If hope keeps you in losing trades too long, panic throws you out of winning ones too early. You enter a trade, it moves in your favor, and suddenly your heart starts racing. You see a small profit, and you grab it instantly, terrified it will disappear. The irony is cruel. You let your losses run, and you cut your profits short. You're doing the exact opposite of what success demands. Livermore's rule was clear. Cut your losses quickly, but let your profits run. Yet most traders invert it because of panic. Panic is born from fear. Fear of losing what you've gained, fear of being wrong, fear of missing out. But fear is just the absence of trust. Trust in your system, trust in your analysis, trust in your own discipline. When you panic, you prove you never truly trusted your plan to begin with. You were trading to avoid pain, not to make smart decisions. The market rewards courage, but not recklessness. It rewards calm conviction born of preparation. Every trader must learn this brutal lesson. The market will test your emotions until it finds your breaking point. If you trade with hope and panic, the market will find it fast. But if you trade with patience and confidence, you'll outlast those who don't. Livermore knew that most traders weren't beaten by bad trades, they were beaten by emotional reactions to those trades. One moment of panic can erase a week of good decisions. One act of hope can erase a year of hard-earned profits. The antidote to both hope and panic is discipline. The same quiet strength that Livermore built his fortune on. Discipline means acting on facts, not feelings. It means cutting losses without hesitation and holding winners without fear. It means trusting your stop-loss more than your instincts. It's not easy. It goes against human nature. But trading success is built on doing what's hard but right, not what's easy but wrong. Livermore often said that the market has a way of humiliating anyone who refuses to learn humility on their own. Hope and panic are both forms of arrogance. One believes the market will bend to your wishes, and the other believes the market will destroy you instantly. The truth lies in the middle. The market does nothing to you. It just moves. You choose how to respond. The wise trader learns to replace hope with planning and panic with patience. When a trade goes wrong, he doesn't hope. He exits. When a trade goes right, he doesn't panic. He manages it. He understands that emotion is a cost, not a compass. Livermore's wisdom remains timeless. Emotions have no place in speculation. The trader who allows them to rule his decisions will find himself ruled by losses. So, the next time you feel hope whispering in your ear as your trade sinks lower, or panic pounding in your chest as your profit rises higher, stop and breathe. Remember that neither emotion will make you money, only discipline will. Hope belongs to dreamers, panic belongs to victims, but discipline belongs to traders. And in Livermore's world, and in the market's world, only the disciplined survive. There's a saying Jesse Livermore repeated often, there is nothing new on Wall Street. There can't be, because speculation is as old as the hills. Whatever happens in the stock market today has happened before and will happen again. That single truth explains everything. The booms, the busts, the bubbles, and the blow-ups. The market doesn't change. Technology changes, tickers change, tools evolve. But the human beings behind the trades remain the same. And it's their emotions, greed, fear, hope, pride, impatience, that make history repeat itself over and over again. If you look back 100 years, traders were standing in crowded pits shouting bids and offers. Today, They're sitting in front of 6 monitors clicking buttons in silence. Yet the outcome is the same: some make fortunes, most lose. It's not the charts or the data that decide, it's the behavior. Livermore saw this cycle unfold throughout his life. Men who made millions in the bull market and lost it all in the bear. He did it himself more than once. Why? Because even the wisest among us are still human. We don't trade markets, we trade our own psychology reflected through them. Human nature is the invisible hand that moves every market. When prices rise, greed blinds reason. When prices fall, fear blinds opportunity. Every crash, every rally, every wave of hysteria or euphoria can be traced back to the same unchanging instincts. People convince themselves. This time it's different, but Livermore knew it never is. In 1929, traders believed the market had entered a new era of prosperity. Sound familiar? Every generation thinks it's smarter than the last, and every generation eventually learns the same lesson. The market punishes arrogance and rewards discipline. That's why history is the greatest trading manual ever written. It shows you that charts change, but emotions don't. The South Sea bubble of 1720, the dot-com boom of the 2000s, the cryptomania of the 2020s. They all share the same DNA. Crowds chasing easy money, convinced that risk no longer matters. Then, when the illusion cracks, panic sets in and everyone rushes for the exit at once. Livermore said, "The big money is made in the big swings." But what he didn't need to say is that those swings are always driven by the same animal spirits. Greed when it rises, fear when it falls. Understanding this truth gives you an edge far greater than any algorithm. If you can see that human nature doesn't change, you can anticipate behavior before it unfolds. You can recognize greed at its peak and fear at its bottom. When everyone else is euphoric, discipline tells you to step back. When everyone else is terrified, courage tells you to step in. Livermore wasn't just trading stocks. He was trading psychology. He read the market's emotions through the tape the same way a psychologist reads body language. The names changed, but the patterns never did. Yet, knowing this truth isn't enough. Most traders still fall victim to it. They tell themselves, "I won't make the same mistake." But in the heat of the moment, when money is moving and screens are glowing green or red, instinct takes over. That's why Livermore believed that trading was a battle not against the market, but against yourself. The trader who masters his own emotions masters the game. Everyone else is just noise. The constancy of human nature is both the curse and the beauty of the market. It means the same traps will always exist. Overconfidence, revenge trading, greed, fear, impatience. But it also means the same opportunities will always exist for those who recognize them. The patterns repeat because people repeat. And the traders who study behavior instead of just price will always have a timeless edge. Livermore often described the market as a great teacher, but one with a cruel grading system. It gives the test first and the lesson afterward. Every mistake you make is a mirror held up to your own weaknesses. Those who fail to learn keep repeating the same errors under different tickers. The market doesn't forgive ignorance, but it rewards humility. Once you understand that your emotions are the true enemy, every chart becomes a reflection of psychology, not prediction. That's why the best traders are also the most self-aware. They know greed will always whisper, "Just one more trade." They know fear will always warn, "Get out before it's too late." And they know those voices never go away. They just grow quieter as discipline grows stronger. Livermore's life proved that you never conquer emotion, you manage it. Every day you face the same demons, and every day you choose reason over reaction. In the end, markets don't evolve beyond human nature. They are human nature. They are greed and fear given numerical form, hope and panic plotted on a chart. The trader who forgets this will always be caught off guard when history repeats itself. But the trader who remembers it will stay calm amid the chaos. Because while everything on the screen changes, prices, trends, technology, one truth remains eternal: the only thing you can truly control is yourself. Livermore's legacy isn't just about money, it's about mastery, mastery of mind over market. He left behind more than fortune, he left a philosophy. The market, he said, is the greatest psychological mirror ever built. Look into it and you'll see yourself, your strengths, your flaws, your fears. The trader who studies that reflection will survive any era, any crash, any new technology. Because no matter what century it is, or what instrument is traded, human nature never changes, and the disciplined trader never stops adapting to it. So here we are. At the end of every chart, every candle, every lesson the market has ever taught, the truth never changes. You can have all the tools in the world, AI models, high-speed data, 10 screens glowing like a city skyline, but none of it will save you if you can't control yourself. The trader's greatest enemy has never been the market, it has always been the mirror. Averaging down turns pride into poison. Chasing the market turns greed into chaos. Lack of discipline turns talent into tragedy. Hope and panic turn logic into noise. And through it all, human nature remains the same. forever testing those who dare to play this game. The market doesn't care about your background, your intelligence, or your dreams. It rewards discipline and punishes emotion, always has, always will. Livermore lived that truth, led that truth, and left us with one unbreakable rule. There is nothing new on Wall Street because human nature never changes. So the next time you sit before the screen and feel that rush, that spark of fear or greed that pushes you to act, pause. Remember what you've learned. The market doesn't demand perfection, it demands control. You can't outsmart it, but you can outlast it, if you master yourself. Because in the end, trading isn't about predicting the next move, it's about surviving the next mistake. And survival, not brilliance, is the real measure of greatness. So stay patient when others panic. Stay humble when you're winning. And when the tape tests your courage, remember Livermore's final truth. The market is never wrong. Your emotions are. That's the difference between those who chase fortune and those who build one. That's the line between gamblers and traders, and that's where your edge begins.